right, guys, welcome to another PrimeTime Pips video. I am Brian, the CEO of the actual company. And today we're actually going to be talking about, I'm sorry, I'm sick yet again. But today we're actually going to be talking about position management versus risk management, because you only hear people talking about one. So what is position management and what is risk management? So in one of the older videos where we kind of brushed over risk management and how you should view it and why it's important to have a larger risk reward ratio rather than a 1-to-1, like some people on YouTube is telling people to do, which I have no idea why. So going off of that, risk management is how much you're willing to risk per trade, versus position management is what you do when that trade is active. How do you manage your actual position? Okay, so we're actually going to be moving over to the charts really quick just to kind of pretty much break down and go over what you should be doing every time you're in a trade and how to get to break even or risk-free trade without having to worry about getting stopped out, especially if it's a long-term trade. Scalpers managing your trade, not really too much necessary, but you have to manage it to some sense if you're a scalper. But if you're a day trader or a swing trader, you definitely have to manage your position very wisely, because a lot of people don't even know that you can take a certain percentage off of a live trade, so you can capture some profits and still have that live trade still going. So what we're going to do, like I said, we're going to move over to my computer really quick and we are going to go over this. What's going on, guys? Now we're at my computer here. Okay, now we're just going to go over pretty much position management, since we kind of went over risk management. So let's say we got into a trade. This is the 5-minute chart on GA. This happened Friday. But during these times, we're able to find trades at these times on the Friday. So I had like I said, we trade every morning. YouTube is going to be starting to do it. We're going to start doing it on there as well. Every single morning on YouTube, so you guys can hop on and trade for free alongside me if you want to, or just sit there and watch to see what I'm doing and see how accurate I really am. I don't like to just talk about shit. This is why I give out so much free content, but I don't like to just talk about it. I like to actually show you that I've been doing this for some time and I am accurate almost every single day in the market. I do take losses. I would never in my life say I don't take losses. Losses is a part of the game. But I win a lot, so that takes out those losses. One win for me takes out at minimum 3 losses. So if I'm constantly winning, I'm creating more of a gap for me possibly blowing out my account, which I don't see that would ever happen now as far as I have come. But let's get started going over this though. So when price came up here, I was expecting a retest from this impulse here, from where it shot from, to get right in here. There's other reasons in between that, but as you guys know, every video I say it's because it'll be unfair for me to go in depth with this when that's what my mentorship pays for. That's what my students learn inside the mentorship, I should say. So when price came back up, I had a buy limit just sitting here waiting. And then if this was the hour chart, it would have took hours for me to actually get hit in, but eventually it hit me in, and then it ran up to take that high. Take profit, my first one was here, and my second one was right on up in there. Okay, first take profit because of a imbalance in price was right there. I'm not going to go over an imbalance in price. And my second one was because that was another resistance zone that I seen that it could possibly hit. So throughout this is what this trade would have looked like. If my mouse will work, that'll be great. Boom. Cool. Stop loss was right below here, right on this, the bodies of these candles here where the volume is. All right, so this is a 1-to-7 risk reward ratio, guys. This is how, because I have people who have been following me that will now be watching my YouTube videos. This is how, when people say, how am I getting 1-to-6, 1-to-7 risk reward ratios? Because I'm on a 5-minute doing this, but remember, guys, that I'm still getting the same percentage, right? I'm risking the same percentage, which is 2%. And I have a 1-to-7 risk reward ratio. That's 14% growth in one trade. This is how I'm able to grow my account so fast and still minimize my losses correctly. If you have a trading plan and you're doing that, this is part of that risk management video. If you guys don't remember that video, just go back into my uploads and find it, or I should put it in the description actually below. But if it's not there, just go back and look at that. Okay. So we have a 7.6 stop loss, which that allows me to do a crazy lot size, just having 7 pips worth of a stop loss. So just for numbers sake, let's just say I just did a normal standard lot. Okay, I just did normal standard lot, 10 cents per pip. That's what I wanted to do. So if I lost this, it's costing me $70, right? But that'll be technically 2% of my account, right? Now, if it goes up, which is not 2% of my account, but if it goes up, I'm making $550. So I'm risking $70 to make $550. So if somebody came to you on the street and said, "Hey man, you give me $70, you could possibly get $550 if things go right," would you take that chance, giving that person $70? Or let me not just put it as a random guy. Let's say you actually know this person, a good friend of yours. Like, hey, you give me $70, I could possibly make it $550. But there's also a chance that you can lose the $70. What do you think? Me personally, I'm gonna take that all day because I'm a trader. We take those odds every single fucking day, but it's worth the risk. Okay, I got $70. $70 is not gonna make or break you. If it's gonna make or break you, you shouldn't be trying to do Forex right now. You should be trying to get a job or two to get yourself up and then try to do Forex. But $70 is not gonna be that detrimental to my account at all. Okay, especially if you're depositing $1,000+. Okay, $70. Okay, that's a nice percentage of my account. That's more than It's definitely more than 2%. You'll be like, oh man, like that's more than what I wanted to risk, but hey, I had lost it. But when we actually get activated in, we immediately get wicked in. This is the stuff that you see on my Instagram in the mornings of me getting wick entries, and it's consistent. It's consistent, guys. I do it all the time. Like, there's nobody in this earth that can tell me that I'm not doing it, because people watch me trade every day, trade alongside me every day. Students are successful, and I'm about to start doing it on YouTube for free. There's nobody on this green's earth that can tell me that I'm not doing this. Okay? When price shoots down, wicks is in, and starts going up. Now, is this the point where we can put our stop loss at break even? This is not where I would do it yet. I would wait for price. Normally, when price goes up, I would have waited for another dip down and then another dip up to move it to break even. Okay, but so in this case, when price did come up, it came back down and actually hit us in directly again. This was a very sensitive point, heavy point of support for this chart in that area, which was good. And then price came back up, came back down, and started shooting up. This is when stop loss got moved to break even. And now at that point, we're in a risk-free trade. Risk-free trade. We have nothing but wins at that point. And as it keeps going up and it breaks a high like this, we can move our stop loss up into profit right underneath this wick. So we're in profit right now. Regardless of what happens, we are in profit. But once it runs that high up here, once it reaches that high, we're already up like 30 pips. Yeah, 34 pips. So if we're up 34 pips, normally I like to trail 15 pips behind, so we can put our stop loss at 15 pips and guarantee ourselves 150 if we did a standard lot. Or when it's at 34 pips and we move it to break even, because we know price can easily come back down far if we move our stop loss up and up. It can come back down to hit us out. But if we left it at break even, this is what I like to do. Unless I'm up like 60 or 70 pips, that's when I put my stop loss in profit a lot of the time. If price is going up and I'm up 34 pips, I always tell my students 15 pips a day can change your life. I don't care how you look at it. 15 pips per day can change your life if you are constantly doing that. Do not sleep on 10 to 15 pips per day. Everybody think they got to get 80 or 90. You don't. 15 pips will change your life. So once I get to 15 to 20 pips, that's a solid trade to me in the morning. If I'm trying to get in and get out, 15, 20, that's a solid trade. Because if I'm doing a standard lot at minimum, excuse me, that's 150 to 200 pips, and I may get 30. I may make $300 that day really quick. Or if I did a 3.0, I can make a lot more than that. Right? If I got 20 pips at a 3.0, now I made $600. Just real quick. Okay, so don't sleep on this because that shit can make you a lot of money. But as I'm up 30-something pips and I take profit is 55, I can take off, guys, a percentage off my trade. So if I want to close 50% off and just take half of the money at 34, which is $340, I would take half of $340. Okay, so $170. That's what I'm closing. I'm guaranteeing myself right then and there $170, and I'm letting the rest run to my take profit. Okay, so if I put the stop loss back, I'm going to do the same thing that I did in another video for the risk management one. I want you guys to notice 1, 2, 3, 4, 5. We had a 1 to 7 risk reward ratio, right? So let me move these over really quick. I want you guys to really be learning from this. Each one of these boxes represent 2%. Okay, because that's what my stop loss is, right? I'm only risking 2%. Your risk tolerance may be different. You may be somebody who like to gamble their money. You go to the boat, you're like, no, I'm going to gamble 20% of this. That's you. That's not me. It's not the proper way to trade, but I mean, if it works for you, it works for you. There's too many ways to trade. I would never knock somebody for trading a different way. I see traders doing that shit all the time, and that bothers the fuck out of me. Just for the simple fact that we're all going through the same thing, trying to, when we were first trying to learn. Who cares what other people are making? I don't give a shit. That does not affect my life. You guys don't see me going. You would never see me going, oh, I wonder how much. I don't know who's a good trader that you guys may know, but he's like, oh, I wonder how much that person is making. I can give two shits. He's not giving me any of that. All right. I just want you guys to remember that. It does not matter what anybody else is making. It's about what you're making. And a lot of traders don't take their time to. There's a lot of successful traders that don't teach because they don't give a shit about teaching anybody how to do this. But they had to get taught. Everybody got taught something. These methods are not new. These are old methods. It just depends on who you learn from and how you view the market. Okay, so now that I got these up, you can see once we got up here, that was 2% of our account. Our 1 to 3 reward was 6% right here. So once we got to 6%, which was 23 pips in profit, we could have took half off there. We're like, okay, we at least want a 1 to 3 every single trade. I always preach 1 to 3 or more. Once you got to a 1 to 3, you could have took off half and be like, all right, cool, I'm going to let the rest, just kind of do its thing. That's perfectly fine. You already made a nice amount of money. Even if it comes down to hit your stop loss, you still came out in profit because you managed your trade. You managed your position properly. Okay? But once we get up to that high that we were looking to even run, because our take profits were above that, our first take profit was here. And this is another way that you can do it. Once you hit your first take profit, always have 3. guys. Always at least try to have 3 or 2 take profits. So once you hit your first take profit, you can take half of that off. But once we hit our first take profit, that's 2, 4, 6, 8, 10. I'd say about 11% growth. You can take it all there if you want. But all right, cool. I just gained my account 11%. Take it and run with it. That's perfectly fine. You deserve it. Because after doing your due diligence and marking up a chart and seeing where you want to hop in at, and it works out for you, you deserve that 11% growth. Okay, so if you have a $100 account, you just made $11. Don't sound like a lot, but you keep doing that, your account grows, and you end up being a lot better. But this is position management. Knowing when to take some profits off the table, knowing when to close a trade, and knowing when to let one ride, right? Now, even if you have a bigger stop loss, because not all you guys who have not learned from me, I mean, some people out there that's getting small stop losses like me also. 100%. I'm not the only one. It's a nice amount of people who found some type of way in their own way to get small stop losses and still make a lot of money. Some of you guys, though, will have 30 pips stop losses. I know if you guys checked out my first free course, I had one on risk management. I completely think of risk management in a different way, which you'll see in the part 2 free course of when I talk about risk management. And then even in the mentorship, we get even more in depth. I have a whole section dedicated to risk management because of how important it is. But if you guys just do this, like even if you got to draw these little squares, or they're kind of skinny, so rectangles, even if you have to draw these rectangles and put them side by side so you can measure your stop loss and know that's 2%, and watch your trade go up, you're like, shit, I'm up 6% right now. I'm just going to go ahead and close it. Like that's beautiful. That's how you should do it. This comes with practice. You being able to see stuff like this and know how much you're up percentage wise. Okay, like download not download, but insert a MyFX book. Go to MyFX book and plug in your account there. It'll keep the percentage for you every day. Every day when you get done trading, it'll let you know how much percentage that you grew that day, and it'll let you know how much you've grown overall. Okay? Don't let people put limits on you. Okay? Don't let people say, oh, 4% growth a month is good. And somebody came to me and said that, but hey, cool, that's good for you. For me, I want a bit more. And some people may even say, oh no, that's impossible. You can't make that type of money. And then they will sit there and watch me do it right in front of them. And that's when shit gets a little messy. All right. Other than that, guys, that's pretty much it with position management. Please take your time. Oh, that's what I was about to say with the 30 pips. I'm sorry, I like to rant. If you guys have 30 to 40 pips of a stop loss and you're getting a little too deep into your stop loss, you're like, fuck, this thing may stop me out. You gotta have points to where you're like, okay, if it passed this is definitely going down. I want to get out. Right? And that could be your 30 pips. But while you're 15 pips or 20 pips negative, you guys know that you can still take a position off. You can close half of that position off. So you're not taking the full deficit of that loss. Okay, you can take half of your position off to lose a little bit early on a piece of it and keep the rest running just in case it goes back the other way and hit your take profit. Okay, it's many things that you can do, guys. Take time. The most time that you guys should be putting in towards different things, number one should be chart work. Always chart work. Looking at charts constantly in the demo account. 2, risk and position management. Knowing what you're doing with your risk, having a trading plan, and knowing how to manage your position. This is all demo account. And until you get good with this, stay in demo account, please. And 3, your mental. Okay, you need to have a solid mindset, a strong mindset. Because when I first started, it was difficult for me to see those red numbers rather than a blue number. Seeing those red numbers scared me, and I was like, oh shit, I don't think I'll be able to handle this. And I would close trades early, and then it'll go my way. I know everybody has experienced that, closing the trade early, and then it goes that person's way. Take your time with this stuff, guys. I promise you will reap the benefits no matter how long it takes. Just keep doing it. All right, but other than that, guys, that's pretty much it. I'll see you in the next one.